In Investing 101 today, Mark Horner of Fairhaven Management joins us to take a look at customer rewards. Thanks for coming on the show.
Always great to be with you, Angie.
And this is exciting because places like Dominos and T-Mobile are now offering shares of the companies.
They are.
Good idea, bad idea?
Well, I think it's a good idea because client reward or loyalty programs, I think, are broken just in general. Studies say 40-50% of the people that participate them don't even use the reward. So I think it's ripe for opportunity for improvement, and Dominos and T-Mobile are being creative to try and address that.
Now we have a look at the stock. So this is basically where T-Mobile's trading right now, and then of course Dominos. So if you're given some stock, what do you do? Because that's the next question people would want to know. What do I do with this now that I have this stock?
Sure. So right now, Dominos is trading in the around 170, and T-Mobile is something in the high 50s or so. So I would say, just in general, if a company that you do business with wants to say thank you for being a client by giving you stock, go ahead and take it. Now, what you do with it after that, so whether you buy, whether you hold it or sell it, that I think is a different decision.
That is the tough call.
It is.
Yes.
It is. Now I'd say, so again, a $50 or $170 share of stock is probably not going to make or break a person's long-term financial plan. But I'd say if we're having this conversation 4 or 5 years from now, and we're looking at a person's portfolio that is 50% Domino's stock, that's a conversation to talk both about diversification, but maybe as importantly, we got to have a little more balance in our diet. That person's eating way too much pizza.
It's a lot of pizza. So if somebody does decide to take advantage of this program, and so here you are with this Domino's stock, is it better, do you think, to just hold on to it? Because for one thing, you really did get it free. So
you did.
Buy low, sell high is already happening here.
So again, the whether you hold it or sell it is a different decision than accepting it. I think anybody should go ahead and accept stock that they're given. But then there needs to be a little bit more work about how that stock fits in with their overall financial plan, what they think about the investment merits of that company. And so there's a lot more work that goes into that decision.
So what kind of work would you do if all of a sudden you did get one of these rewards with stock coming from T-Mobile or from Domino's? What would you do? What would be your first step?
Sure. So again, with one share of stock, it's not going to make or break a person's financial plan. But if that started to accumulate, you're going to want to look at the quality of the management of a company, the financial performance of the company, so both revenue and earnings. Maybe look at some analyst estimates about their thoughts about the future prospects for the company. So, and then look at how that stock fits in with your overall portfolio. So now we're getting into asset allocation discussions, and then a person's individual risk profile. So everybody's a little bit different in terms of their goals and what they're trying to accomplish and the risk that they can tolerate.
And it never hurts to take into consideration, does the pizza still taste great? Are your friends ordering more? Are they going to T-Mobile more? Or do they not like the company? What's going on out on the streets and your feeling toward the company?
Right. So that's a great example that Peter Lynch talked about. Now, Peter Lynch was a famous investment manager, ran Fidelity Magellan's fund back 20 or 30 years ago, really helped put Fidelity on the map. And in his books, he talked about the power that each of us has to observe the businesses around us, the businesses that we do business with, to try and identify investment opportunities. And so making investment decisions is more than, I really like the pepperoni pizza that they make. But that's not a bad place to start about what companies do you really enjoy the product or the service experience with. I think that's a good place to start in the investment decision.
Well, thank you for coming on this show and
Great
helping
to
us
be
out with
here.
Investing 101 today.
Thank you, Angie.